neckline was weak, so AutoChart has picked that up as a 4-bar versus the other chart which had a 10-bar. And even though that was weak, we still had an extended move down, but it took time for this trade to develop. Here's another Forex pattern. Again, I showed you before the 15-minute chart. I think I used this example before, and you can see that it came up again in the 30-minute chart, which is one of the classic characteristics of the head and shoulders. If it shows up on one time frame, typically it'll show up in another time frame. For the stock index, here's the S&P 500 30-minute. You can see that almost equidistant and same level for these shoulders, and that's one of the reasons why we have this strong uniformity rating and this high level clarity rating that the market did follow through to the downside, and then it even exceeded the target. So that's one thing to note, is that this pattern can develop enough momentum to break through the target zones. So that's one decision process that you'll have to work on, is whether to take the target or trail. Here's a U.S. tech, or this is a CFD market, and it's the equivalent of the NASDAQ. So you can see that it made a head and shoulders pattern and finally broke through, and momentum was such that it continued lower. This was done with a strong initial trend. So this was where the market may have been rallying for quite some time before it made this first top and gave us a high initial trend. And just to note that all of them are going to start out that way, where you have the initial trend up, and all of them are also going to be reversal patterns, because when they do get the breakdown, they finally break down the opposite way of the initial trend. Here's the stocks 50 60-minute head and shoulders. See, this one took 177 minutes to form, so it's elongated, and it's kind of unorthodox, where you may see the same price levels for the shoulders, but each shoulder was formed differently. Okay, but nonetheless, when it broke through the neckline, it broke through with a maximum 10-bar breakout rating, and the market continued down into the target zone. And that wraps up the webinar. Covered all the examples I wanted to, both live and in the some of the charts I had. I covered the basic rules. We also talked about the importance of having a stop in the marketplace. We covered how to find the searches, so I didn't let you. I let you see exactly what to look for and how to set up AutoChartist for the searches. And the rest now is up to you to study and experiment with the searches and set up the searches the way you want to that fit your personal preferences. Okay, I am going to look at...
James, thanks very much.
Okay.
Hi, James.
Yes.
Thanks very much for that. Very good session.
I'm going to stop recording now, correct?
We've got quite a few questions. I don't know, you're going to have some time to look over the questions?
Sure. I'm going to leave the recorder on when I do the questions, correct?
That's fine.
Okay, and I will go to... let me just find my questions on here. Are you going to read the questions, or you want me to read them?
Questions? That's fine.
I'm sorry?
You can read the questions.
Okay. I'm looking for the question section.
James?
Yes, I'm looking for the question. Oh, here it is. I've checked the
Okay,
box.
all right. Let me shoot. I'm gonna read one to
I
you.
have it set up now.
You have it set up. Okay, great.
Yeah,
okay,
I cleared some boxes up. All right, I am going to expand my questions here. And the first question is, what do you think where I can find a sponsor for the opening of, that may not be the question I want to do. Yes, this webinar has been recorded and it will be put up on the website shortly after this webinar. How reliable is the Head and Shoulders pattern, and what is the probability of success with this pattern? Okay, that question's been answered also. And see here. Where do you position your stop losses on the Head and Shoulders breakout? This question here. The best point to put it at, if you're a pure momentum trader and a short-term momentum trader, is you put it, the tightest stop you can put it at is above the neckline after the breakout. Okay, the next level would be above the shoulder, and the final level would be above the head. And again, I don't know if you practice money management where you size your positions according to, say, a percentage of your equity, but it is possible to trade, to use the biggest stop possible above the head, but what it'll mean is you have a smaller position. If you pick the shoulder, a stop above the shoulder, you'll have a little bit bigger position, but you can risk the same amount of money. And then if you're a pure scalper or a quick type trader, then you may want to place your stops right above the neckline when the momentum shifts. So those are your three choices. One, momentum shift means that you're playing for a breakout to the downside. You needed momentum to keep the thrust moving in that direction. As soon as you notice there was a vacuum there, or I'm using terms maybe you're not familiar with, but usually when you're short, if you're trading, you can feel that there's downside pressure or a big seller. As soon as that seller goes away, the market kind of stops going down. Those are usually clues for scalpers that they should cover. The other point is above the shoulder. It makes sense that if the market fails at that shoulder, it's going to possibly test the head. So you can put a stop there. And then finally, if it goes through the head, you're wrong on the pattern completely. So those are your three levels you want to put your stops at. All right, so our next question is, where is the neckline on this chart? Not familiar with what chart we were looking at, but on these charts, the support line that was drawn, that is actually the neckline on every one of those charts. So when we were looking at these chart patterns, for example here, this is always going to be the neckline right here. This is the shoulders connecting. So these are the support line is always the neckline. All right, so let me get on to the next question. Let me move this box here so I can read the questions. What pairs and intervals time frames does James routinely use in his trading? When I look at pairs, I try to stick with the 8 majors, and I tend to favor the commodity-linked currencies. So I like Australian, New Zealand, and Canadian dollars. I feel that since I grew up pretty much in the futures business, they tend to move more like futures markets, and Euro and the British pound tend to be a little bit too choppy for me. So I tend to favor those 3 markets. As far as my time frames, I pretty much I don't use a 5. I'll use a 15. I'm not in a 5-minute type trader. I'll use a 15. I'll use 30s, and I'd have to think that my favorite is probably the hourly. 60-minute. Okay, let's see what we have here. Do you somehow manage the trailing stop on the head and shoulders pattern after hitting the target? Well, I talked about that in other webinars about the target. The target is a box, remember. So there's a minimum target and there's a maximum target. Okay? So that's just an idea of where the market could go to. What you want to do when the market hits the target, the first level of the target zone, if you have a logical stop point that you can trail to, in other words, if the market was breaking down, and you could see it on AutoChartist that it was breaking through support and headed towards the target, if it made say a zigzag pattern in between its way down to the target, what you could do is you could trail the stop above that particular zigzag pattern. Or what you can do is after it hits the target, you can set a trailing stop at a percentage of the move. You could say, I'm willing to give back 50% of this move, or some percentage. You can also say that you're willing to give back a certain dollar amount of a move. So those are ideas for trailing stops. Basically, what happens is when the market hits a target zone, it becomes a momentum read. And if you can focus on is, there's still big offers in the market. I know you may not be able to see this sometimes with the Forex markets, but if you're trading equities or if you're trading indices or futures, you can see, if you can see order flow, that'll help you decide whether you want to